As you know, cost segregation is a complex study. The reason you want to do that is it increases your cash flow. Now, 30% of $1 million is quite a bit of money to be able to accelerate, so the client was definitely very pleased.
Welcome to Above the Margin, a financial knowledge base for independent and entrepreneurial businesses, covering the latest in tax credits and financial strategy. Each podcast discussion equips business owners with clarity and confidence to make better informed decisions that empower growth. We hope you enjoy the episode.
Hi, I'm Crystal Brown, your Director of Business Development here at Omega Accounting Solutions. Today with me is Isaac Downing, our all-around tax expert and specifically well-versed in cost segregation. And with that, we're actually going to just jump right to it today. And with that, Isaac, how did you get started in cost segregation?
Oh, that's a long story, but I can kind of give you the short and sweet version of it.
We'll appreciate that.
So, throughout college, I had my first job as a fixed asset manager and really progressed throughout the cost segregation world here. I like to say that I've done every single job in the cost segregation industry, whether from being a fixed asset manager, managing the actual assets in-house, to being a cost segregation engineer, from actually doing the actual studies, to going out and doing the business development, really teaching our clients what the importance of cost segregation is and how to really benefit their clients.
So can you please provide a very high level overview of cost segregation, like a 101 version?
Oh, that is a complex question. As you know, cost segregation is a complex study. So the easiest way I like to explain it is cost segregation is taking specific components throughout an actual building and putting them into shorter-lived asset lives. Now, you have your standard 39-year life for commercial real estate and 27.5-year for residential rental properties. Now, through an actual study, an engineer goes and assesses your actual property, conducts a site visits, and able to segregate specific components with shorter-lived asset lives.
Great. So how would you say it really benefits the client then?
Right. So when you're doing the cost segregation study and you're segregating these specific assets into those shorter lived asset life, in return, it accelerates your depreciation. Now, the reason you want to do that is it increases your cash flow. And as we talked about earlier, the time value of money, $1 today is not going to be the same value it is in the future. So a lot of investors, specifically in the real estate realm, really see that time value of money as an actual powerful tool and utilize that accelerated depreciation to increase their cash flow in order to go out and buy other properties or invest in other opportunities.
This just sounds so beneficial. Why do you think everyone isn't doing this?
Yeah, you're right. Well, quite frankly, a lot of CPAs do not have that engineering background in order to utilize this. And in fact, a lot of real estate professionals don't know about this study. So it's really important that we're out there really educating the clients, really informing them of this amazing benefit that they're able to receive.
Can you provide an example of a cost segregation study win for a client?
That is a great question. We've had a lot of successful cost segregation studies over here at Omega. I can give you a couple of different examples and kind of show you the spectrum of what a client potentially could receive. We just recently did a client that purchased a property roughly around $1 million. He was utilizing it for an Airbnb property. That was a single family residential home that he used as a rental property, where our engineers were able to go out there, do a site visit on the property, full cost segregation study, and accelerate 30% of the actual basis amount. Now, 30% of $1 million is quite a bit of money that they're able to accelerate, so the client was definitely very pleased. We also had another client that recently purchased a shopping center. Roughly, I want to just give you a rough estimate number, around $10 million. Again, that client was able to do a full cost segregation study, go through every single of the retail stores here throughout that shopping center. We're able to accelerate close to 35%. That is a lot of money if you think about 35% of $10 million. So again, this was extremely beneficial to the client. They turned around, utilized that increased cash flow to go out and buy another property.
So it sounds like this could benefit a variety of clients, but just in your expertise, is there an ideal client profile for a cost segregation study?
Well, cost segregation study can be done on anybody who has any real estate, residential real estate, or any commercial real estate. These are the clients you want to ask questions for. Anybody that has purchased a property here within the past 10 years or so, it's always worth taking a look at. You definitely don't want to leave any money on the table.
So when you say residential, is this all residential?
As long as you're utilizing it as a residential rental property, that's what's going to be able to take that depreciation on there. If you're living on the property, unfortunately, you can't utilize this actual study.
So no primary residence.
No primary residence, right?
Or if somebody has like a vacation home, but they're not renting it out, can they do that?
Well, they're not utilizing that on the depreciation. They're not taking depreciation if it's something like that. Now, you want to see if a client utilizes that rental property as an Airbnb, then absolutely they can take advantage of this study.
What is the best time to conduct a cost seg study?
Best time is going to be as soon as you purchase the property. As soon as the property is over, transferred over to you, and you just started that depreciation, that is going to be your best possible time to do a cost segregation study. It hasn't been placed in service. It hasn't been taken depreciation on. It is really quick and easy. Now, just because an asset has been placed in service, you've had it already for 5 years, you can still do a cost segregation study. And the best part is you don't have to amend your return. You simply file a 3115. So if you bought in a property within the past 10 years, I highly suggest taking a look and seeing if a cost segregation would be the best fit for you.
What happens if an investor is looking to purchase a property? Is there any way that you can step in at that point?
Yeah, absolutely, you can. Even if the client hasn't purchased the property, we can gladly give the investor an estimate of benefit and showing them how much potentially they can save through a cost segregation study. Now, this is vital, especially when you're looking at pro formas, really for the projections. It's really good to understand how much potentially they could save if they utilize this powerful tool.
For somebody considering a cost segregation study, which sounds like everyone should be who's investing, what would their initial steps be?
Well, first, you would want to contact us, obviously. I think that would be a good move. But then, just talk to us. Let us know a little bit about your initiatives. What are you planning on doing with the property? Are you planning on selling it? Are you planning on holding it for a while? That's going to be key as well. Are you planning on doing any type of renovations to this property? All these things come into play when we were discussing a cost segregation study to see if it's going to be a great fit for you.
So looking here at the landscape of cost segregation and tax law, how do you see things evolving?
Well, there's a lot of changes going on in legislation right now, but one of the things that does look very promising is 100% bonus depreciation being reactivated. Now, as we talked about earlier here with the TCJA, 100% bonus was from 9/27/2017 to 12/31/2022. If you bought a property in that time frame, any asset that is segregated out under 20 years can be taken bonus depreciation up to 100%. So that means anything that we're segregating out can be taken within the first year. This has been a game changer throughout all the industry, able to utilize smaller properties like Airbnb up to large skyscrapers. Now, it has been dwindling down 20%, and it will be until it's fully exhausted in 2026. But right now, legislation is going in play right now, and there's a lot of conversations that are talking about reenacting that 100% bonus depreciation. So I'm really excited to see what the future has in hold for us.
Isaac, thanks so much for your time and your expertise, and cost segregation just sounds so beneficial. As we're wrapping up here, is there anything, any parting last words or knowledge or anything else you want to say to our audience?
Yeah, one of the things is I highly recommend if you have purchased a property here within the past 10 years to have a professional take a look at it. Again, an estimated benefit is free of charge here. We don't charge anything at all to take a look at your property here at Omega and let you know how much potential benefit you can receive.